Hello, good morning, everybody. You're with Markit Manufacturing, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European markets session outlook. Starting with the North American markets, yesterday the Dow and the Nasdaq went up 5 points for the industrial average and 26 for the Nasdaq. The Dixie index went severely up to 95.70 from a little bit over 95. S&P Case-Shiller home price indexes worse than expected by 0.6%. Chicago Purchasing Managers Index 0.6 points worse than expected, and then consumer confidence 4.1 better than expected, and the Redwood Index month-on-month, year-on-year lower than previous, and year-on-year higher than previous. The GDP in Canada month-on-month 0.2% worse than expected. Biggest movers: USD Loonie 6 points up, USD Swiss franc 9 points up. Consumer confidence over the past 2 months, consumers have grown more confident about the current state of business and employment conditions. In addition, they are now more optimistic about the near-term future, although sentiment regarding income prospects is little changed. Today, we have ISM Manufacturing PMI as Tier 1 event in the agenda, and then we have Tier 2 events such as ADP Employment Change, Markit Manufacturing PMI, ISM Price Paid, and Construction Spendings month-on-month reading. For tomorrow, everybody should be looking at the markets a little bit more carefully. Unemployment rate and the non-farm payrolls are due. Moving along to the European markets, yesterday the German DAX 20 points down, CAC 40 also 20 points down. German unemployment rate 6.4% as expected, pretty much there's 1,000 change. European CPI inflation data came out quite positive year on year, and core CPI as well, a little bit higher, 0.8% from 0.6 expected. Unemployment rate as expected, and Italian unemployment rate as expected as well. CPI a little bit lower in Italy. Today we have Eurogroup meeting, Germany, French, Italian, and the EU Markit Manufacturing PMI as well. The IMF confirmed that Greece had not made its scheduled 1.6 billion euro loan repayment to the fund. As a result, the managing director, Christine Lagarde, will report to the Global Lenders Board that Greece is in arrears, the official euphemism for default. The Eurogroup of Eurozone finance ministers will hold a new conference call on Greece at 9:30 GMT on Wednesday. Its chairman, Mr. Dijsselbloem, said that yesterday rumors that the Greek officials would change their stance on the vote on Sunday if a new loan was received. As a result, big movements yesterday. Euro dollar 90 pips down, euro pound 40 down, 160 for the Aussie, the Canadian dollar 40 down, and 110 versus the Japanese yen. We have PPI month-on-month and year-on-year, along with the ECB monetary policy meeting accounts reports today. Moving along to the UK markets, the FTSE 100 had 110 points movement yesterday, closed at 6,490. Current account year-on-year a little bit lower, £2 billion worse than expected. The GDP came a little bit better though, better than previous and better than expected. Year-on-year, quarter-on-quarter came out as expected but better than previous. Fundamentally, the GDP in the UK rose by 0.4% in the first quarter, as the sharp drop initially predicted for the construction sector did not materialize. British economy grew faster than anticipated in the opening months, but suffered a marked slowdown compared to the end of 2014. Analysts state that the showdown in the first quarter will probably be temporary, and that the overall picture is for broad economic growth. The main engine for the economic growth in England would be the household spendings. As a result, the GDP Aussie 11 points down yesterday, 16-point range. versus the New Zealand dollar, 10 points up yesterday, 30 points range, and versus the Swissy, 10 points up yesterday, 18 points range, and 5 points up already today. Of course, we have the Markit Manufacturing PMI in June. We have the Financial Stability Report, which is a little bit more concerning, and the Bank of England Governor, Mr. Carney's speech today. Moving along to the Asian Pacific sector, starting with the Japanese Nikkei. It ranged over 200 points yesterday, 61 points up, opened with 71 points gap, 3 points gap around 3 a.m. and 120 points up already today. All green data yesterday in the calendar, except the Tenkan non-manufacturing outlook for the second quarter. In China, non-manufacturing PMI slightly better than previous, now at 53.8. Also, the NBS manufacturing PMI slightly worse than expected, 0.1, now at 50.2. The HSBC manufacturing PMI reading slightly worse than expected, 0.2, currently below the 50 level, 49.4. Yesterday, the biggest mover there were the Swiss franc versus Japanese yen, 22 range, 16 points down, versus the euro, 17 points range, 13 points down. The Kiwi, Japanese yen, 14 points range, 8 points down, and versus the pound, 13 points range, 9 points down, as well as the Canadian dollar, Japanese yen, 14-point range, 7 points down yesterday. Foreign investments in Japan, stocks and bonds readings are scheduled today, as well as the monetary base reading. In Australia, the AIG Performance Manufacturing Index, 20% lower than previous. Glenn Stevens had a speech where he said that very accommodating global monetary policy is likely to remain in place for quite a while. He also said that the inflation looks a bit too low globally and hinted that financial stability could replace price stability as a central bank's prime objective sometime in the future. Mr. Stevens said that the Royal Bank of Australia's view on the Australian dollar hasn't changed, and that further depreciation in the currency is both likely and necessary. Australia's deficit is not bad compared to other countries' performance. The example given is that it has a debt to GDP ratio of 20%, when the average is 72% globally. Hence, the IMF encourages more investment and spending. The biggest mover yesterday was the Aussie Kiwi, 12 points up, 18 points range. For tomorrow, imports, exports, and trade balance for Australia. On Friday, there's going to be the monthly retail sales outlook. Moving to the commodities sector, the S&P 500 index had a range of 20 points at 2,055 currently. Gold had a range of $14 yesterday, trading at 1172 currently. The futures fell mildly, extending losses from the previous session amid a stronger dollar. Prices eased in Asia on Wednesday as investors awaited more clarity on Greece after it formally missed a payment on its sovereign debt, but also sought more time. Silver had a range of 38 cents yesterday, currently at $15.60 per troy ounce. The crude oil, the WTI, had $1.70 range at $59 per barrel currently. Overnight, the futures surged yesterday, ending a 5-session losing streak as Iran and a group of Western powers extended a deadline for a comprehensive nuclear deal below the upcoming 4th of July holiday this weekend. Crude oil prices reversed course in Asia on Wednesday after manufacturing data from China and despite downbeat U.S. industry data on stockpiles. Earlier, the American Petroleum Institute said that U.S. crude stocks jumped 1.875 million barrels last week, while distillates rose 263,000 barrels and gasoline supplies gained 334,000. As Iran nears a deal to ease oil sanctions after almost 2 years of talks, selling more crude remains a long way off. Increasing exports by 50% as soon as restrictions are lifted won't be fulfilled. This is what Goldman Sachs, Bank of America, and Societe Generale are predicting. That would require an extra 500,000 barrels of daily output, which the banks say will take 6 up to 12 months after the talks are done. That is all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.